Meta Platforms is one growth stock down 45.8% that I think you might regret not buying on this dip here. Now, I'm going to explain why I think that's the case in this video. So stay tuned and let's begin. Now, you look at Meta Platforms revenue chart annually over the last decade and you see a very nice upward trajectory up until this last year. What you see here is that revenue exploded in 2021 for Meta Platforms, and then it's had this slightly negative year where revenue decreased or flatlined right around 116.61 billion. Now, this was due to a multitude of factors, one of which being the explosion in revenue from the year before, the others being the increased competition from TikTok. Millions of users are flocking to TikTok and spending a lot of time on the TikTok platform. That's directly taking away time that could be spent on Meta Platforms, Facebook, or Instagram, or WhatsApp platforms. So that's one thing that's been taking away from Meta Platforms. The other is that Apple instituted privacy policy changes on its devices that makes it harder for Meta Platforms to track user activity, and in that way it makes it harder for Meta Platforms to sell targeted advertising. Now, targeted advertising is a lot more desired from marketers because it brings in a higher return on investment, right? You don't want to show advertisements for a steak restaurant in Miami, Florida to a vegetarian who lives in Portland, Oregon, right? That's not going to be a customer. So you don't want to show that person an advertisement. It's wasted, right? So by delivering targeted advertising, your return on that investment is higher, and so marketers much prefer targeted ads, and they're willing to pay higher prices for the privilege to show targeted advertisement. That benefits Meta Platforms. So the removal, I shouldn't say removal, it's the reduction, not complete removal, of the ability to show targeted advertisements that's also hurting Meta Platforms. Now, these factors can be overcome, although it will not be easy for Meta Platforms to overcome the privacy policy changes. It can be overcome. Meta Platforms can work its apps in a way to get users to divulge more information about themselves, which consumers already do, right? If you go onto the Facebook platform, you can update your marital status. You can update the city that you live in, where you went to college. You can even update when you're checking into a specific store, concert, theme park, restaurant. So you can let Facebook know where you're at, the types of places you visit, when your birthday is, and all of that. So the more that Meta Platforms can get you to share your information with it, the better it is for its ability to sell targeted advertising. And the way it can do that is to offer users enhanced features by revealing more information. So users would be willing to share more information because they get better use out of the platform when they share more information. So that's something that you can feel reasonably confident that Meta Platforms can achieve, although this is not likely to be a quick fix or an easy fix. The other reason why I believe Meta Platforms is an excellent buy on this dip here is because the business is so lucrative. Generating revenue from advertising sales on its platform is so incredibly profitable. The company has maintained an operating profit margin north of 30%, upwards of 50% at certain points over the last decade. It has only recently dipped below 30% to 24.82%, and Meta Platforms has already taken major steps to remedy this declining profitability. It has announced several rounds of layoffs. It has shuttered some non-core business operations, and it's shedding some office space that's going to save it money since so many of its workers are working remotely. And I believe it's reducing also its investments in the metaverse, delaying and elongating those investments instead of taking them all up front like it had been doing. It had already spent more than $10 billion on the metaverse in 2021. So it's kind of slowing down those investments and spreading them out longer term. And so for all those reasons, I think 2024 will be an year of growing profitability for meta platforms. 2023 I think is still going to be difficult and challenging. 2024 I think will be the catalyst year for when meta platforms can turn things around and re-accelerate revenue and profit growth. And look at this chart here, cash flow from operations for meta platforms over the last decade. Look at this very nice growth here, going from close to zero and rising all the way up to $60 billion in cash flow from operations, all while operating a free-to-use product. It's extremely lucrative. That has come down to 50 billion, but again, those cost-cutting measures that I mentioned earlier will help to re-accelerate cash flow from operations growth, I believe, starting in 2024, not 2023. 2023, it's still going to go through these cost cuts. Remember, when it lays off people, it usually pays a severance package, and so that could take several months for that to come off their books. And also when, let's say, you had agreed for a 5-year lease, and if you want to cancel that lease, you got to pay the landlord a certain amount or a fee to get out of those leases for office space. So for those reasons, 2023 earnings may be pressured, but starting 2024, it's going to compare to a year when it had those expenses, and 2024, those expenses will be off its books. It most likely will be off its books by then. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. And the final reason why I think you might regret not buying Meta Platforms stock on this dip is because of the favorable valuation. Meta Platforms is selling at a forward price to earnings ratio of just 17.13, near the lowest it has been going back a couple of years. And if you look back at the last decade, Meta Platforms has traded at an average price to earnings ratio of about 25. So you're getting it at 17 right now. And remember, this is accounting for earnings here over the next year, forward 1 year earnings, which are likely to be pressured because of the near term, right? The next 3 quarters, the earnings prospects are going to be pressured because of the reasons I mentioned earlier. However, starting in mid 2024, late 2024, early 2025, Meta Platforms earnings prospects are likely to be better. So looking out further ahead, you're getting a good deal on Meta Platforms stock right now. All right, so that's all I've got for this video. Thank you so much for watching. I've picked a few videos that I think you're going to enjoy, so please click one of those and I'll see you over there.